Welcome back, guys. I hope you guys watched the video of the 9 EMA and also the Fibonacci that's on the website. And now we're going to the third indicator, which is the volume. And this one's pretty simple. We only look companies that have over 500,000 on average volume, and they have over 1 million recent volume. And this is to find the algorithms. We don't want companies that are not doing any trading. There's a company that could be looking good, but there's nobody buying into it or selling. So you can get stuck, like we said previously. So the volume, this indicator is pretty simple. It doesn't take a lot of time to explain. The next one does a little bit, which is the timing of the resistance and the support. And if you see, I call it the anatomy. And it's because using what we did before, the three phases, on the first phase, the stock gaps open or has a sudden rally on volume and in price, but the 9 EMA is not as effective. We don't usually look at it on phase one. On phase two, it starts to get closer, but the breakout hasn't happened yet. So it creates a trend of the Fibonacci pattern, but then when it leads to phase three, that's when the breakout occurs. And then the increased volume, that's when you start writing the EMA in the 2-minute or the 5-minute intervals. So this is what creates the trend of the resistance and the support. And that's why we go to the next slide, where we have some key terms that I want you to learn. And this is the resistance. There's an established resistance, and that's what we look at to break. For example, here in the chart, we use a $5 stock, which is really common. And here the resistance is at the level at which the supply and the sellers of the stocks is believed to be heavier than its demand. So it creates a resistance, meaning that the stock prices rises to a resistance level before sellers are willing to sell at these prices, which prevents the stock from rising further. And this is created by the algorithms that big companies have done on these companies. The resistance then it's established by the relative high of a stock price over the course of time. Say, for example, on the picture, the stock rises to $6 a share, and then it falls back to $5. If it rises again to $6 a share later, then $6 could be considered the resistance area, which that in the past, the supply sellers of the stock at this price have caused it to stop rising. On the bottom, we see the resistance levels don't always hold, and that's when the breakout occurs. The increased demand of buying pressure in the stock can lead to the breakout of the resistance level. Thus, the demand of buyers has overtaken the power of the supply or the sellers, and the stock prices break out and is likely to rise as the sellers have dried up and the buyers continue to take control. Uptrend, which is the next key term, it's a sustained uptrend, and that's what we want to look for. Not a broken, as you see in the bottom, a broken trend. An uptrend, which is common term as a bull trend, it's an ascending trend, occurs when the stock price is sustained by continuation of a higher price as time progresses, meaning that the price rises as time progresses. There is still a high demand of the stock at its current price, and there's more people buying than people selling. An uptrend line can be drawn by connecting the 2 points or more of the price action, and this is done by connecting each higher low in an uptrend as price retest. This trend line supports the demand increases, as this is where the new buyers comes in. As long as the price stays above the ascending trend line, then this is considered that the stock is still bullish and still has a high demand, so it means it's still going up. If the price drops below the ascending trend line, then it is possible that the trend is over and may begin moving in an opposite direction, and that means there's no longer a high demand of the stock, and it could be a sign that it's going to drop. So this will be the sign about to sell. The next key trend that I want to go over with is the downtrend, and the downtrend is pretty simple, as you see on the picture. It means it's a common term as a bear trend or descending trend. And it occurs when the stock price is sustained by continuation of lower prices as time progresses, meaning that as the price declines, there's more sellers and there's still a high supply of the stock as is current and declining. A downtrend line can be drawn by connecting 2 points or more of the price action, and this is done so by connecting each lower high in a downtrend as price retest the trend line resistance. The supply increases as this is where new sellers come in and join in the current trend. Here in this case, what we look for, it's a break of the downtrend. As long as the price stays below the descending trend line, then it's considered that the stock is still bearish. That means I do not buy, and still has a high supply. If price rises above the descending line, then it's very possible that there is a shift and that the trend is over and it begins to move on the opposite direction. And that's why there's no longer a high supply of sellers. So it's looking like the stock is about to go up. The next key terms are very simple and it's a little bit easier to learn. It's called the bull flag or the bull pennant. And as you can see here, it's very simple. You look for the trend line. If it's an uptrend, or if it's a downtrend, you look for the breakaway or the breakout point. To show you a couple of examples, and I want to show you a couple of the profit examples that I have. Here we're looking at this company CPWM, where we got in at $5.99 and then got out at $7.50 because it was keeping up with the 9 EMA, and this was for a 25% gain. On the next picture, we have one around $4 that we sold. And as you see here, as soon as it broke out, it tested the 9 EMA and then it shot up again. And after 25, that's what I like to do. Usually around 20-25%, I'm looking to sell. On the next picture, we have another example on penny stocks, which I love them. We went long at 69 cents and it shot up so fast that it gained around 110% in just a matter of minutes. And then we sold for a nice 100% gain. And not always you get this much, but it's really nice to have this type of gains in one day. And the next one, it's a little bit higher at around $1.93 we got in. And then we sold around $2.72 for around 40% gain. And as you see here, the 9 EMA guide to you, it's actually good to use it as a guide to let you know if it's gonna be an uptrend, if it's bullish, and that's how you guide when to buy and when to sell. And this is good for you to understand my alerts, not only to go buy them, but to do your own and to do your own trades. Next, I want to show you a couple of losses. For example, here I got in at around 970, and it didn't continue, so I sold at 960 for a 5% loss. And that's what I like to do. I like to leave my losses under 6, 7, 8%. If it doesn't go your way, you cut your losses quickly. So basically, that's what I want you guys to learn, especially at the beginning, especially if you're using your demo account, practice cutting your losses. And the second one, as you see, it was a smaller stock, around $1. We thought it was going to break out. We got in around 120. And it didn't go as we expected. We broke the 9 EMA, so we cut our losses quickly, around 3%. And that's how you make your profit. You take your profit around 20% or higher. If it doesn't go your way, cut your losses quickly. So basically, this is it. So finishing up, I hope you guys enjoyed this strategy that I went over of Vortex trading. And I want to leave you with a couple of thoughts. First, like we mentioned, accept that failure is part of the game. That's why you need to cut your losses quickly. To win, you have to be able to take your profits and also take your losses. Don't be greedy on any trade that you make. Use the practice account and let's keep learning together. Let's keep making money together. As you see, I love what I do. I love life. I don't worship money, but I love the freedom that it delivers. And I love being in control of my time. I love being in control of my adventures, my life, and my future. And that's what's become meaningful for me, helping others do the same. So this is it. I had a good time. I hope you become active on our Facebook site. And I look forward to grow myself and my team as we continue learning and making money together. Take advantage of the live videos on Facebook. Share this, the ones we have on the Facebook app. check Zen Millionaires because we always have new videos coming up and new training. So remember, plan, execute, and profit. Thank you, and thank you for being part of Zen Millionaires. And I look forward to trading and making money together with you. Thank you.